Hey, Andy and Steve, what's going on today?
Hey, thank you, Scott. Hey, everybody. Hello, Andy.
Hello, Steve. Hi, Scott. And hello, everybody.
Happy Tuesday. Welcome to the Trade of the Week webinar. Looks like we are seen and heard out there. So let's get started as the others file in. Just a quick reminder on the disclaimer slide here that we're a software as a service subscription company, and we're not advisors. We're not brokers. We don't get paid for fees for giving advice. We're just a couple of longtime users and traders. So anything you see or hear today is not to be considered financial advice. It's just the opinions of myself and Mr. Andy there. So knock that down. Good to go. Both Andy and I have been using this product for 17 years, and it's a great program. We really recommend you give it at least a month subscription to try and get up to speed on it, because there's a lot you can learn and there's a lot you can do with it. It's not really something you learn overnight. We have a lot of different ways in which we can try to help you guys shorten that learning curve, primarily the live trading room with Barry Anderson, who's a saint in there, runs a free live trading room with chat and visual desktop. It's a great place to go learn about the service for zero. We have the afternoon webinars like you're doing now, usually Monday through Thursday. And then on every day, we've got what was called the daily support sessions. Basically, Barry takes a break around noon Eastern, and myself are in and today. And it's a great place, again, to come in if you're a new user, to come in and get all the information you need. Because there's not a lot of, let's just put it this way, there's a lot to learn. All right, so we'll move on here. The next one is just the redirect, the URL that gives you the redirect to the live room, trade-ideas.com/live. If you type that in, it'll take you directly to the 12 o'clock noon hour. All right. Okay, we'll get started here for the trade of the week as people continue to file in. You know, just a reminder that man and machine are working really well together here, and no man is better than a machine, and no machine is better than a man or a human, because we see that often with our AI. A lot of people use the AI for the entry, and they take it from there. The AI doesn't really seem to be as good as exits as the human being, so it's a great symbiotic relationship going forward. It's just how it is. And in the fintech space here, Trade Ideas is definitely taking the role of the machine and making it easier for the human to curate all this information. All right, so you know, we've got a lot of new users. Of the winners are actually on my A-table scan here. I clean people's homes at the moment, so iRobot. We're having a good growth spurt as well here at Trade Ideas because, you know, there's a few reasons out there, but you know, there's no sports, there's no sports betting. We're getting a slice of that crowd to come over here, and then other people who are off and just kind of looking to learn something new. So we welcome everybody. Can't quite get back to again here. You know, we had the same direction. Other than that, we're kind of trapped. Oops, there we go. Let's grab that. We're kind of trapped here. How the 200, you get it here and here to back here, the 200-day I'm talking about. We're on the close. Andy brought up a good point earlier in private with us. It said too, and sometimes you get to see some interesting action at the end of the day on those calendar days, windowed market prices. So holding on, moving averages, we got close back. The technology NASDAQ has just been a massive leader that we can talk all day long. Off, I will circle the line. Really seem to want to violate the 20-day moving average. That little candle, you know, kind of indicative of like a zombie apocalypse. You pump them full of lead and they just keep coming at you. S&P, as I said, year below their respective S&P 500. And Andy, do you want?
No, you pretty much said it. Hey, yeah, they could just take out that little wedge that they built there. I definitely like to focus more on the SPYs than I do the Qs. I always talk about that, but yeah, let's see what happens for today. See what happens. You know, NEO stocks, you're going to see that a lot to 50. You know, you're not going to see too many stocks up there. You know, let's take a look at some of the others. Like this, I mean, I have seen that's a little too far. Best is during earnings season. Okay, we're right. NEO get probably pretty, not too many, but then it starts. Earnings starts to pick up. You know, 13th to 14th, I start earnings reports. So I'm just during earnings season, maybe the second week the start of earnings season that month, and then it runs probably get a good 6 weeks out of it anyway. So keep an eye on Neo during that time, because it only stands to reason logically if she's out there looking when that one came out, because
All right, great. All right, welcome back to my desktop here. We're going to talk about the trade of the week this week. SP, beautiful giant green. This, typical of the way the market works. It can't get ahead of itself. It tries to get ahead of itself, find support. So it looked like on this particular, the fact that didn't have that candle on Friday. It had a very strong candle on Friday. So we identified some relative strength with some good volume, and we decided to say, well, if the market follows through to the downside, this might not trigger, and no harm, no foul. If the market does dig in, then we got ourselves a candidate here that's showing some really good relative strength. Maybe we can continue to enjoy that. So we'll fast forward a little bit here. And yesterday, this was yesterday's chart in the 15-minute realm. And as you can see, that basically the excuse me, the price opened right there at the top of that red body candle, just a few cents above our trigger price, traded up for a little bit, and then kind of pulled back. So there was, tons of areas to get long the entry suggested price above the high of Friday. Wasn't really excited to see this pullback, but let me show you something. Yesterday's pullback, in the bigger picture of things, this is about as cup and handily as they say as you can get. That orange line was kind of our trigger line, and when you look at that pullback, it just is a great example of what I like to say of, if they can't move through like butter and follow through, whether it's the algorithms or just price action of human beings and price action in general and the herd human behavior, you got to pull that battering ram back a little bit, get a better grip on it, have a good meal, and then have the strength to go push through. So it was nice to see at least recovered yesterday above my intraday momentum line, closed above that, and then today just kind of followed that momentum line all the way back through our trigger price, and just a little bit of a hiccup at the close there. But the point is, this is a swing trading idea, and there's no reason to want to be impatient or get out. The trade is working as it should. We just want to see it follow that 10-period moving average as it moves and snakes its way up. And as I had mentioned earlier to some people, the 10-period moving average is what has been holding for the most part. But we don't want to make that our stop. We're going to go ahead and give it a little bit of a backstop and use this rising 20-period in red. So if we get a day where we get a down flush and the candle actually decides to close under that 20-day moving average, this trade is out. The idea is off the table. But for the moment, let's erase that line now that we've talked about it. I think this thing wants to move higher. It's just being cupped and like a bird in the hand of a palm, getting ready to fly. As long as it stays above that 10-period moving average, I think everything will be fine. And that was this week. So it's only 2 days under our belt, and we'll just continue to be patient and watch that. I want to go back to last week's trade of the week was GDX. It was a ETF for the most part. Not for the most part, but it is an ETF. And last week we talked about having to jump in and sometimes deal with what we would call, and here, this was the day right here. I'll back up on it. Right here, this was the day where it's called, and it gapped above our price. And we talked about how to play a gap when it happens when we're watching something and does it get away from us. We have a few different options on how we can decide to play it. And we talked about this rising 10-period moving average coming in to catch the price can be a great secondary price action for the for that. And so it spent most of last week just going sideways, and that was okay. And coming into the last couple of days, this is a really, you guys should really imprint on this, a really nice kind of a consolidation. Didn't give too much back, pretty much touched the 10-period moving average there, but that sideways consolidation gave way to a real nice push a little bit yesterday, the beginning yesterday, and some nice follow through today. And I want to show something. Andy saw this in real time because we trade in the same account for some of these things. I went ahead and I took half the gold GDX off the table, and I want to show you why. When it starts to break out on here, the first thing I want to do is get my pen. Is I want to look left and see where are the levels of interest where the sellers might show up. Yes, we're breaking out of a nice little area here, but let's not get too focused on that. Let's look back here. The top of that, I'm going to go ahead and draw it. The top of that wick and the bottoms of those two over there was a pretty good pivot point. It's actually a little bit aggressive. I want to pull back a little bit more. There we go. So today I sold half of GDX. I like to sell. I did a story on this about a month ago. I prefer to take profits when they're going in my favor, not when I have to. When the trend line breaks and everybody's running for the exit door at the same time, you get your trailing stuff. You're gonna, you're not gonna go broke, but you're not gonna get rich taking profits on trailing stops. Where you're going to separate yourself from the rest of the traders is selling when they're buying, just like I like to buy when they're selling to create an entry. When the price really starts getting going, I look left over here and I see back in May, oh, there's a big pivot point, 2 lows on those candle and 1 high on that candle. That's a pivot point. I'm going to go ahead and sell. And at the end of the day, I'm okay with it. I mean, I got my price, it pulled back, it caught the moving average, bounced up, caught it, but it spent most of the day at that price at which I already sold half. So hopefully the other half will continue to move higher, but that's the way in which I like to take profits, not down here. If it had broken this level right here, then everybody's taking profits down here. And the difference between taking profits there and taking profits there starts to really add up at the end of the month, let me tell you that. So that's a little update on the GDX. It's working really nicely. I fully expect maybe tomorrow a test of the prior high back there. And if we do get that, I'll probably be taking the rest off the table because I just like to do that and then get off the wave and paddle out and look for the next chart to go surfing in. So that was last week's trade of the week, working pretty well. That's a really beautiful daily right there. I was so confident coming into today. I told Andy, I said, I think we're gonna have a pretty good day. So confident I actually beefed up my 401k with the gold holdings last week. All right, anything you want to add to the 2 trade of the weeks there? Do we have any questions? They're both still working.
Yeah, no, nothing to add. I'm answering questions over here. Nope.
All right, cool. Statistically, Waleed, probably the Neo with exiting on your own. The moderate exit. Let Neo generate some good relative volume plays, and then from there you can kind of manage the trade from there. And then I recommend just using this moving average to manage your trade. Stay in. Okay, it's time to get out. If that's the way you want to play it, or sell, as I was just talking about, sell into strength when you get it. Okay, so I wanted to do something a little different for the newer users. Yes, GDX move sold half. We've got a few new channels, and I don't know how much. I think maybe Andy talked about this in his webinar, but I'm going to talk a little bit about some of these new channels. We've got some new graphics in there, and I went and kind of took a look around and saw a few things of interest for the most part. If we scroll down these channels here, we're starting to see there's some new graphics in there and a couple to stop on. Account builder. This is interesting. Dan wanted me to show people the account builder today. This is kind of a new one, and it looks like, quite sure, just go to the channel and go in here and say, well, what's going on here? Oh, okay, these are stocks only between 1 and 20. Okay, they're up 2% from the close, and they're doing pretty good relative volume today. So it's just kind of like a little watch list of stocks, people that want to play lower price stocks under 20. These are definitely in play today. And as I click through, you can see these are in play. So why am I showing you this? Because again, there's a lot of new people coming to trade ideas. And I think a lot of people look and immediately go, I don't know how to configure what I'm looking for. I don't even know what I'm looking for, let alone how to configure this thing. It looks really, really intense. So we've created these these palettes, these channels where you can just come and immediately kind of start to get a feel in real time what's being served up and what your opportunities are. Again, if you're somebody who's into stocks under 20 and you want to see where the action is, apparently this looks like an interesting channel. But I want to move on to a couple others, or at least highlight another one. We've had the pre-market channel for a while. And the pre-market channel has always showed us the up gappers and the down gappers, which is cool. But what do you do with them? And this is where I kind of got a little surprised today. I didn't realize, I had heard about it, but I didn't realize it. We've actually got how to trade these gaps. So this new channel here with that little funny little graphic that Rudy made, kind of takes the pre-market channel and takes it to the next level, because when we have gaps, whether they're ups or down gaps, you basically got 2 scenarios for each, 4 scenarios in total. And it looks like the guys have built those 4 scenarios into this multi-strategy here. Let's take a look at it. Strategies, these are the different scenarios. Gap up and go, pretty self-explanatory. Gap and crap, that's funny, but that's true, it happens. Gap down and continue to go down, and gap down and crap backwards, backwards crap, if you will, upwards. So I think there's value in this. And so what I want to show some of you guys is if you're brand new and you don't know where to start, you don't have a layout, you can come here to the gap channel, and I'm going to say right click and save this to your cloud. Okay, maybe there's something else on here. There's a couple of other short squeeze channels. The Trader's Vault is a great one. It's got some of the ones you normally see on my scan, like the A table and the jam down by. You can do the same thing on all of these channels. Come through and then just right click and save to the cloud. So I'm going to focus on how I think there might be some value in this new scan that seems to have popped up in this new channel called Trading the Gap. So we saved that scan. We'll go back to my bread and butter layout, the default layout. And let's open that, load from cloud. Okay, so what I want to say here is I want to kind of do what I normally do, talk about the 15-minute chart, and that's going to give us some ideas here as we click through. Let's go ahead and go into the history of today, and we'll just start to see all of them. And what we're going to see are stocks that either gapped up or gapped down to start the day, and then what happened. Okay, now I'm not going to necessarily be interested at the end of the day, so let's scroll back towards more of the beginning of the day, or in the middle of the day, and see what we can find here. All right, so gap down and then reverse back up. Let's see, that seems to be the ones that came through first. Okay, let's look at this one. Interesting. Okay, so what I want to show you is in each one of these, let's just go back to the first one. What is happening when the price meets, that's what we're going to focus on. What is happening when the price meets the moving average? Well, in this case, if you were watching DCX and decided you might want to go along DCX, what I'm going to suggest is this is where the human element's going to come in, okay? Trade Ideas is serving up the idea, but the human element is going to look at the 10-period moving average. The price got caught here and it didn't move higher. Might be one to stay away from. Let's say the price did close higher. Maybe that was your signal to say, okay, well, this one gapped down too much. It broke through that momentum line. It doesn't look like it's going lower. Maybe I can ride this a little bit higher. Let's look for a few more examples of this one. Okay, so this one gapped down, and then the minute it broke through our 10-period moving average early in the day, that was a good hour and a half of pretty solid movement up. So what we're doing here, just to kind of reiterate, is we're looking at the idea of either gapping up or gapping down and using that 10, great example right here. Okay, so this one gapped down, IPR, that's a pretty big gap down. Let's see what happens when the rubber meets the road here, when the 10-period moving average catches up. Is it going to throw the price action back down? And if it did, well, you could consider going short, but it didn't. So this is really the moment of truth is what I'm trying to show you here. That closed above the 10-period moving average and then it's pretty much on for the rest of the day. So your gatekeeper or your moment of action is what happens when the price meets these. And I want to try and refine this a little bit more. Here's a different example. Okay, gapped down and it tried to go up and then it started making new lows. You can see how the 10-period moving average is giving you a short opportunity here. The reason people like to play gaps is because that's really where the action is. You know, you're starting the day in a standard deviation more than likely, and there's going to be a lot of movement. We just don't know if the movement's going to be continuation of the gap or if it's going to be a filling, a reversal of the gap. I think this is one, this is a completely different one. Gap down, here's our moment of truth. The price didn't go any lower. Maybe it's time for a reversal, and at the end of the day. Is this making sense, Andy, or am I just talking crazy talk right here?
No, it's making total sense. Sure it is.
Have you been on this channel before? Have you looked
I haven't. No, I got to check it out. What's it called? What's it called? Gap and Go?
It's called Trading the Gap. And
no, the window.
Oh, the window, it's called gap and, because it can gap and go, gap and crap.
I got
So
you.
there's 4 different scenarios. And so the 4 different scenarios of longs and shorts, ups and down gaps are all pretty much already configured for you guys in this scan. Gap up and crap, not a great example there. And then I think we have one more, gap down and crap. Yeah, it just kept going lower after the gap. So, you know, there's no one right way to play these things, but the point is it's showing you where the action is, and I'm trying to give you a way to look at these and say, you know, maybe I do want to use these 10 period moving averages and play off of them. You know, here was a gap where it actually held. Maybe you want to buy, go long off of that, but then there's the candle that got you out. One thing I did want to do is there's a lot of stocks coming through here. So you could come through, and one of the first things you would probably do if you have a lot of stocks coming through is you want to shore up the average daily volume. And what it looks like the guys that configured this didn't put an average daily volume in there. They just said, as long as the stock's done 50,000 today. I don't really like that. I prefer to have a nice average volume in there. And I like to use a 3-month filter and say, just show me the stuff that's really liquid, maybe the stuff that does 500,000 shares. So just that one little correction right there alone, and you'd have to do that, mind you, the case, all 4 of them, I'm sorry, go in there and change the filters. But that will bring in less returns, you know, turn off the volume today and add a 3-month average volume, something along those lines. Oops. I think you get the picture. Oh, so if you're not aware of it, again, what's the takeaway here? Just trying to show new traders. For the most part, you can go to any of these channels, find a specific scan and a theme-related market or a theme-related channel that you might like, grab 4 or 5 of them, save them to your cloud, and then bring them in and load them from the cloud into your desktop, and you can start to create the workspace that you want. And I just want to remind people we've made some good changes here and some good updates to some of these channels. Explosive winners, that's probably going to be things that are moving higher on explosive volume. So check these out on your own, and then when you get to the channel, you just got to, you know, break them open and look at them one by one and see what's it doing. Or you can go to the summary tab and actually have it read back to you, and you get kind of the gist of what these different scans are trying to accomplish. And that way you don't have to be worrying about building your own scan or worrying if you're building the right scan or the wrong scan. It's there for everybody who at least has a standard basic subscription. So just want to make you guys aware of that. All right, so new channels, we built that, we built the layout.
Hold on, Steve. I'm going to answer William's question here.
Okay.
Because he's a little bit confused with all the gapping and, you know, gap down and crap, gap up and crap. So what I would do, William, that scenario is 4 different strategies. So what you might want to do is just, or maybe it was even 5, but you might want to just take off 2 and just use the ones that are gapping up at first. There's a potential that they will gap and go. That means they gap higher and they move higher. Or they would gap and crap, you know, they gap higher and they sell off. And of course, you always stand the chance of a stock gapping up and going sideways. You'll see that sometimes too. But yeah, if it's confusing, it's because it's also looking at stocks that are gapping down. So what I would do if you're confused, just maybe start out with a couple of them, just the ones gapping up at first, and then you can. Because it can be confusing when you.
Here's how you would turn them off. You go to strategies, leave the up on, and then turn off that one down and turn off that one down. Now all of a sudden, you've just got things that are going to be going up. You can disable those right there.
Yep.
All right, so I wanted to finish up by looking tomorrow on the sectors. A lot of times we can see what might be in play tomorrow. It looks like it could be setting up for tomorrow in terms of sectors, and it's kind of hard to get them all to line up at the same time, but sometimes we can see at least a handful of some ideas. We talked about GDX. These are the junior miners. I expect some follow through tomorrow. Like I said, I expect follow through up until that orange line. You know, if you're not already long, it doesn't mean chase it. It just might mean that we might have some selling opportunities, profit taking ability tomorrow. So watch for some follow through tomorrow on the gold miners. The banks, they look kind of like the S&P did today. And nothing really special there. Oh, the semis, they had a pretty darn good day. I'm looking at the time frame I had of 15 minutes. I like looking at 15 minutes on the right and then my daily on the left. And I want to definitely stop and say the semis were the star today. They definitely broke out of a range. You'll probably see some follow through in the semiconductors again tomorrow. We were certainly leading the pack higher when it comes to the NASDAQ. Yeah, which is interesting how the OIHs are riding that 50-day moving average. They might be really drawing a line in the sand. That would be something to watch tomorrow. Interesting. That wouldn't be a chase. That would be a possible base building. But geez, I don't know. I'll trust the chart, but I don't know if I trust the fundamentals. Silver. I've talked a lot about silver as recently, and I think this chart kind of tells the story. That's a horrible trend line. It's a horrible drawing line, but the wedge is being violated here to the upside. I think this is silver gave us the wink and a nod today that the move is on. So really good things looking good over in silver, especially pause. Pause was up 7% today, just crushed it. These look interesting actually. The biotechs had a bit of a move out of that congestion and pulled back to their 20 and period moving average. Big close candle there. The biotechs don't look bad. They look pretty interesting. I like that. We talked about the NASDAQ, technology. Energy looks a lot like the oil OIHs did. These are the broker dealers. Software. Again, we're just looking for anything that might really jump out. The financials and the banks don't look good at all. Just to rehash, the semis looked great, and these home builders don't look bad. Trying to break out of that little downstroke there. Gold, silver, gold miners, semiconductors, I think were the ones that really stood out. And then, of course, the IBB, which is the biotech, solars. I'm not really seeing too much other than the ones that really stood out for us. Anything stand out to you at all, Andy?
Steve, I'm sorry, I was answering. I didn't.
Okay.
I
We're
don't.
just looking at
Yeah.
sectors. Nothing really.
Yeah.
All right. The last thing I'm going to do here before I bring Scott in is I'm going to set a few alerts off of my A table. So let's see, where did those go? There we go, price alerts. I should have a couple in there. I want to delete that one. And we're going to delete that one because I do want to work on iRobot. Remember I said some of these COVID plays, they just keep creeping higher. I like the way iRobot's knocking on this glass ceiling here. If it tries to break above 85.48, you got a lot of shorts in there that might scream. I think this one definitely has to be on our radar. Lake's been a name lately. Actually, that's not bad. I'm going to put a little alert just above today's high if it wants to continue. Again, I like to focus mostly. This would have been nice to see a little earlier, some sideways action, but I'm going to stay away from that one. Interesting. Which one is this? I haven't seen that one before. This is Dick's Sporting Goods. This is kind of similar to Sportsman's Warehouse too, maybe a little different. I'm gonna put an all-time high or a previous high on there. It's gonna be that alert right there. Go through a couple more. Peloton just doesn't disappoint. Looking for things, by the way, here that are kind of going sideways. Trade Desk, Custom Computer Services. Never heard of this. That's a funny looking chart. That thing goes back and forth. That's pretty spiky. It's telling me to stay away, kind of like nature. Porcupine, the high here today. We'll see if we can find any for a few announcements. I see Andy's been doing a pretty good job there on the questions. Ideas on here, but they're not always going to be perfect at the right time, at the right moment. I'm going to put this one as going to be our last one. It's a low volume, but we like the sideways action coming up underneath that moving average. All right, so anything I need to answer, Andy, before I share the price alerts out? We got 5 price alerts we can share out.
No, I think I got it. Yeah.
All right. Copy all. Let's drop it into the chat window. Then we'll bring Scott in for some announcements. I think we got a sale coming up for July 4th for people who have not joined yet. All right, I've just popped the price alerts into the chat window. How is the A table configured? I will give you a copy of the A table. Actually, here's what we're going to do. I'm going to give you a book. All right, it's a great question, and I've got a link to an old ebook here, and I'm just going to give you the short link to it. And you can download the ebook, and you can download a copy of the A table alert. And rather than me taking 30 seconds to quickly try and explain it to you, Mariella, the ebook will take care of that. There's a whole chapter in there on how to trade the A table. All right. All right, the price alerts are shared out in the chat window. I will also share the A table as well, the actual scan, since we just kind of went through that. And we'll bring in Scott. A table, there you go, everybody. Have at it, and I'll bring the slideshow back up here.
Yeah, that sounds great. A couple items on our way out. Steve might have mentioned an ebook. Well, you should get the earnings season ebook. It gives some great advice on how to use earnings seasons to your advantage. Has some great strategies in there for you to import into your trade ideas layouts via cloud link. Go ahead and grab that book, trade-ideas.com/earnings. Also a podcast. We just released a new episode yesterday with an interview between Sean, our Chicago Sean McLaughlin, and Pete Mulmut, who is one of the honchos over at the Small Exchange with that version of the futures that they offer that has no pattern day trading rule. You should learn more about that. Just search for Trade Ideas Podcast wherever you listen to your pods and add it and download that newest episode and some of the previous ones. Good stuff. There's a code. Those of you that might want to jump on board with a new subscription or upgrade from standard to premium, just use the code SUMMERTIME. It's going to expire after the holiday 4th weekend when we reconvene next Tuesday. So use it before then. 15% off your first month or year of Trade Ideas or your upgrade. Also, any questions at all, email those to info@trade-ideas.com. You can follow Steve on Twitter @TodayTrader. Also follow @Trade Ideas and @QuantBot and our other handles. Facebook.com/TradeIdeasPros, that Facebook handle to like and share everything with your friends. Again, any questions, email us, info@trade-ideas.com. Thank you, Steve. Thank you, Andy. Y'all have a good afternoon.
All right, see you next time. Thank you.
Thanks, everybody. I'll see you on Thursday.